Hey guys, welcome to today's video. And today we're going to be going over what you missed in the ICT 2022 mentorship. All right, so let's go ahead and get started. All right, first of all, before we get started, I just want to give credit where credit is due. So first and foremost, this is all ICT's concepts. So this entire 2022 mentorship model comes from ICT. So, all credit goes to him. He's the author of all these concepts. And then the second credit that I want to give to is this one YouTuber called Zusi. So in Zusi's videos, he talks about how, he kind of shows everybody the significance behind that market structural shift from ICT's 2022 mentorship model. So let's say that we had a bullish example, right? So we sweep sell side, and then we go higher like that. So this would be kind of that that mentorship model. He like went over how this market structural shift was actually a intermediate term high or low being broken, and then in this video I'm going to kind of build on that and go over the other aspects of what you might have missed in that model as well. But I just wanted to give a quick shout out or credit to those two people as well. All right, so there's that. All right, and then just as a quick preface, in this video, I want to show you the ICT 2022 mentorship model through the lens of one of his other concepts. And the purpose of this video is to show you the depths of ICT's concepts and how his different concepts blend together. So this concept, that I want to kind of show you the mentorship model through is a concept that doesn't necessarily get that much appreciation. And if you were to type in, this concept on YouTube, you wouldn't find that many videos on it because it's not that it's not known. It's just that, people haven't really, gained the full appreciation for this concept. All right. And then you might be wondering what that concept is. And that concept is the interbank dealing range. So what is the interbank dealing range? The interbank dealing range, or just dealing range as I like to call it, is simply just a sweep of both buy side and sell side liquidity, or a sweep of sell side and buy side liquidity. Now, what's the significance of a dealing range? Well, when a dealing range forms, we can anticipate for certain procedures to take place. So let's take a step aside from this, and then let's go into what's happening here first. All right, so let me move my annotation tool to the top. So this right here is the anatomy of a dealing range. All right, the anatomy of a dealing range. So what's happening here? So when a dealing range forms, let's go with a bullish dealing range, for example. So a bullish dealing range. So when a bullish dealing range forms, first we engineer liquidity, and then we sweep sell side liquidity. So sell side liquidity gets swept. And then after that, we sweep buy side liquidity, right? So this is buy side. All right, so we have a sweep of sell side and buy side liquidity right here. So that cements this as a dealing range. Because remember, a dealing range or an interbank dealing range is just a sweep of both buy side and sell side liquidity. All right, so that's what this engineering phase is. And then this neutralizing phase, so just as for simplicity's sake, we call this 1, we call this 2, we call this 3, and we call this 4. All right, so neutralizing is when we take out one end of, either buy side or sell side liquidity. So in this case, we took out buy side first. Let's make this a different color. Or sorry, we took out sell side first. So that's 1. And then we take out buy side. So that's 2, right? So that's engineering, or sorry, this right here is engineering. So we engineer liquidity, and then we neutralize liquidity. So engineer and then neutralize right here, neutralize. And then from there, we distribute. So phase 2 of that dealing range would be distribute. And then from there, we rebalance, right? So we need to come back inside of the range, rebalance, because price has gone from external range liquidity to external range liquidity. And now we need to come back in for internal range liquidity. So we come back inside the range, So that's phase 3. That's that rebalancing phase. So this is phase 3. This is rebalance. And then after we rebalance, we need to redeliver, right? So this would be phase 4, right? So phase 4 would be to redeliver. All right, so let me clear out these annotations and go a little bit more in depth. So when we engineer liquidity, we don't just have to be in a consolidation. We could engineer liquidity like this. This could be seen as an engineering phase because remember, there's buy side above here, there's sell side below here, and then when we sweep sell side, and then after that, we take out buy side, this is also a dealing range. But instead of a consolidation, we have more of, a range type of thing. But either way, this would be our engineering phase. So let's just label that E. All right, so that's our engineering phase. And then we neutralize. So we call that 1. We call this 2. And then now, remember, when I say that when a dealing range forms, we anticipate for certain procedures to take place. So what are those procedures? Well, we took out external range liquidity. Let's make that a different color. So we took out external range liquidity. We took out external range liquidity. Now we need to go back for internal range liquidity. So basically that just means that we need to go back inside the range and then form phase 3. And then from there, we need to go higher and redeliver, right? So this is a standard operating procedure for when an intrabank dealing range forms. Now, you might be wondering, well, let's say that we have something like this, sell side sweep, buy side sweep. And what happens if, we don't get that? Well, there's 2 types of dealing ranges. There's a type 1 dealing range, which I just showed you, and there's also a type 2 dealing range. So we won't go over type 2 dealing ranges today, but this is just the standard operating procedure that we would go by when we see a type 1 dealing range. All right, so now let's go over a bearish example as well. All right, so bearish example. So in a bearish example, we first take buy side liquidity, and then we come for sell side liquidity. And then from there, so let's label our terminology as well. So this is our neutralize, this is our distribute, and then we come back in. This would be phase 3, which is our rebalancing phase. And then from there, we have phase 4, which redelivers, right? So this is phase 4. All right, so this is that bearish dealing range. And then as I mentioned, this engineering phase doesn't have to be a consolidation. So let's say that we have something like this, right? So there's buy side resting above that high. And then there's sell side resting below that low. So let's say that we take buy side, and then now we come back down for sell side liquidity. So buy side taken, and then sell side taken. So 1, and then now we have 2. And then now we expect for price to come back inside the range. We expect price to come back inside the range and then form phase 3, which is our rebalancing phase. And then from there, we anticipate for price to want to redeliver back to the downside. All right, so this is our operating procedures for a bearish dealing range. All right, so this is kind of the lens that I want to, kind of have you guys view that 2022 mentorship model from. And I think that, viewing the 2022 mentorship model from the lens of the intrabank dealing range can kind of help, add a additional layer of confluence, for when you take your trades. Because let's go over that 2022 mentorship model. So we need to wait for, liquidity to be taken. And then from there, we anticipate for, market structural shift. And then from there, a market structural shift with displacement. So displacement, right? And then from there, from that displacement, we're waiting for that fair value gap. And then that's where our entry would come from. So liquidity being taken, and then market structural shift. So let's take a closer look at, this terminology. So let's say that we're coming down. We've just taken sell side liquidity. All right. And then from there, we want to go up. Market structural shift. Right. So MS shift. Right. This right here is a dealing range. Now, price doesn't have to take out this high to form a dealing range. So when we have a dealing range form like this, we're looking at the low and the high associated with that low. So when we have price taking out, both of, that buy side and that sell side range, that is when that dealing range gets cemented. So we have liquidity, market structural shift, displacement. Let's write that in a little bit better. So we have displacement, and then now, all that is 1, 2, and then we have 3, when we get that entry. And then from here, you could potentially go higher. Now, there's one more thing that I want to kind of, say just as a means of framework. So, and that is that PD arrays serve as the potential for a change in the state of delivery. Now, what do I mean by this? Well, I'll explain this when we take a look at some of the chart examples from ICT's trades. All right, so here is ICT's trade from episode 2, and then we can see that price takes out a sell side liquidity pool right here, and then price comes lower. And then we also have a buy side liquidity pool from right here. All right, so after we attack this sell side liquidity pool, what happens as a response to that? And also, what is sell side liquidity? Well, sell side liquidity is a PD array, because sell side liquidity is a old low, right? So an old low is a PD array, and we know that PD arrays have the potential to cause a change in the state of delivery. All right, so now let's take a closer look at what's happening around this level. So right here, we sweep sell side sweep. Actually, let's make this a different color just so this really stands out. So right here, sell side sweep, buy side sweep right here. So we have phase 1, phase 2, and then phase 3 comes in right here. Now, building on what Zusi taught us in his mentorship, or not in his mentorship, but in his YouTube video, he told us that the key to this market structural shift right here was the fact that it rebalances a old fair value gap. So that would classify this as a intermediate term high. All right, so when we have a high that rebalances an old imbalance, that is that intermediate term high. So ITH, and then when that gets broken, that is, as he classified, that's typically where we, would classify that as a market structural shift. And then from there, here's where ICT takes that entry from. And then you could have either this high, or that high over there as your potential objective. Now, right here in this trade, you don't necessarily see the dealing range, but that's okay. Like maybe you don't get involved in that because you don't see all those confluences there, so maybe you just take this trade and then you're good for the day. But in this one, you don't necessarily see that dealing range because yes, this high does get swept, but the entry was over here. So there's no dealing range based entry, for this one right here. You would just have to stick with those standard rules that ICT, gave for this one, and that's okay. All right, so let's take a look at the next example. All right, so same thing here. We have buy side liquidity being taken. What is buy side liquidity? Buy side liquidity is a old high. All right, what is a old high? An old high is a PD array. What is important about a PD array? A PD array has the potential to cause a change in the state of delivery. So now let's see what happens after we attack that high. How does price tip its hand to us? Well, right here. So we go above that high. We take buy side. We take sell side. Because remember, this high is associated with this low, and this low is associated with that high. So that's why we would take those two as our buy side and sell side liquidity sweeps. So here, this forms phase 1. This forms phase 2. This forms phase 3. And then now, after this, we go all the way down here, and then we get phase 4. Either this one or this one you could classify as phase 4. But our overall target for this trade would have been this buy side imbalance, sell side inefficiency over here. All right. And then taking a more in-depth look, why is this fair value gap important to us? Well, if we look to the left, you can see that this intermediate term high, or sorry, this intermediate term low. Actually, let's clear out all of this. That way we can really focus in on what I'm trying to say. So we sweep buy side, sell side. Why is this a market structural shift? Because this low is an intermediate term low. It's important to us because we rebalance this fair value gap with this low right here, and then it gets broken. It gets broken with this displacement to the downside. All right, so we displace lower, we come back in to rebalance, and then from there, we go lower to our target, which is this PD array right down here. All right, so that's that for the episode 4. And then now let's move on to the next one. All right, so this is from episode 8. All right, so from episode 8, what do we see? First of all, time, right? It's time, then price. We can see that ICT is, taking the trade around New York session. So this is New York session. And then what's happening right here? Where is price reacting off of? It's reacting off of this liquidity void right here, but more importantly, this fair value gap right down here. What is a fair value gap? Fair value gap is a PD array. What is a PD array? What is important about a PD array? A PD array has the potential to cause a change in the state of delivery. So what happens as a response of us hitting that during New York session in a bullish market? Well, we sweep sell side, we sweep buy side. And then for this example, you can either take this high or this high over here as your buy side liquidity sweep. It doesn't matter because both of those highs are associated with this low that got swept. So either one will suffice. But the main idea is that's 1, that's 2, 3 forms back inside the range. And then when we have this dealing range, we anticipate for price to then, go higher from here. All right. And then maybe you could target either this high or, hold for the entire daily range expansion off of this. But you can see that dealing range logic is working over here. Now let's take a closer look at this high right here. That high is an intermediate term high, as Zusi says, right? I wasn't the one that discovered this, I have to give credit to Zusi for this, right? So right here, it rebalances that old fair value gap, and then it gets broken, right? So that could be classified as our market structural shift. But all that is phase 2 of the dealing range, of a bullish dealing range, right? So just adding more context to that. All right, and then we get phase 3 here, as I mentioned, and then we go higher. All right, so that's everything for episode 8. Now let's move on. All right, this is episode 9. So what's happening here? Where's the dealing range? So I counsel you guys to, pause the video and then come back to it. All right, so we sweep sell side right here. We sweep buy side right here, this intermediate term high, because remember, it balances this old inefficiency right here or this old fair value gap. So that is classified as that intermediate term high, and then it gets broken. Right, so adding more confluence to this is phase 2 of that dealing range. Phase 2 of dealing range. And also, that is that market structural shift, quote unquote, right? So from there, this is phase 1, phase 2, phase 3 comes back inside of the range. Now, what do we anticipate for, to happen next? Well, we want to see price go towards our buy side objective, which would be in the form of this high right here, right? So price comes back down. Yes, it does, push a little bit lower here, but price ultimately does get to that objective over there because that's the narrative. This is that draw on liquidity. So we're not, going to get confused by price coming down here. We're not looking at this as a market structural shift because yes, this is an intermediate term low, but we have to keep in mind that that draw on liquidity is still up here. So we need to kind of filter this move out and still, stick to our buy side bias until we clear out this high. All right, so that is everything for episode 9. Now let's move on. All right, so this is episode 10, and then same thing happens here. We sweep buy side, we take sell side right here, and then this is that sell side sweep. So what do we get? We get phase 1, we get phase 2, and then we come back up for phase 3, and then price goes lower. All right, so, and then this gives us that phase 4. So maybe if we entered here, we could be targeting this low, or maybe, we take profit here, or, we hold until price reaches our sell side liquidity objective at this green line right here. All right, so that is everything for episode 10. All right, so let's move on. All right, so this is a trade from this week, and then you can see kind of how I use this logic. So this is on Monday, and then first thing is time. So news embargo lifts at 8:30, and then ICT says that, we're good to start looking for trades after there. So what do we have right here? We have that intermediate term high, that buy side liquidity area right here. So that's that buy side liquidity sweep, that intermediate term high, because it rebalances this old fair value gap right here. And then it comes lower. So we sweep sell side. So this is 1. We take buy side. This is 2. We have this fair value gap because remember, this high gets broken with some displacement. So now we have this level right here, and then maybe you could target this or here or there as your upside objectives. All right, so that's pretty much everything for this video, guys. I just wanted to kind of, give you guys some extra tools, that are available within ICT's toolkit. So, really help you guys get a more in-depth look at this model. And as I mentioned, we don't see the dealing range in every single one of his trades, but when we do, that can really serve as a really good additional confluence that the trade is going to go in our direction. And I just really wanted to kind of point this out to you guys. So hopefully you guys, found some value in this video, and I'll talk to you guys in the next one. Cheers.